Boom, 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 boom. Traders, welcome. Surprise, surprise. All right, surprise guys. Come on in, make yourselves comfortable. Let's do this. A quick surprise live for my traders, for my babies, for my followers, for my subscribers. Love you guys. Miss you guys. All right, last live I did actually was this past weekend. I did a live focused on teaching our children how to trade. I think it's our responsibility. All right, if you missed that live, that is still a footprint here on this channel. I believe it's extraordinarily important for all of us, especially if we're adults, even if it's your younger brother, your sister, your daughter, your son, your niece, your nephew, it doesn't matter. We have a responsibility to pass on the gift of trading to our younger generations. Why? Because no one is coming to save them. All right, it's not the traditional educational system that's coming to save them. It is a travesty that we are not educated about markets, about money. If you were to ask the average individual, the average kid in particular today, the average teenager, what money is, they cannot answer. Where it comes from, they cannot answer. What is the intrinsic value of money? What backs it up? They cannot answer, much less how financial markets work, all right, how money works, and how to handle themselves in those markets, right? This responsibility is left on us, all right? So I was fortunate enough to start in the trading business or start trading at the age of 15. I started early, and I saw the benefits of that because by the time I was 21, 22, I was rocking. And by the time I was 28, I really didn't have to work anymore. I continued to work, but I didn't have to work. And that's where we want our younger generation to be, right? In a position where in their young life, they don't have to work for another man, another organization, unless they want to. They can work from a position of passion. They can have the independence, the financial freedom that many people today dream of. And financial markets have the ability to give that to us. Now, that doesn't mean it's easy, but it is a lot easier when you start off young. And I'm sure that many of you wish you started at this activity called trading much younger in your lives. You'd be so much further ahead. The last thing I will say about that is that there could be no better time than starting this activity we call trading than today. A lot of people say, Oliver, I wish that I started when you started. I wish I started in the 80s and the 1990s. No, you don't. All right? It was a lot more difficult. It was a lot more challenging. Technology wasn't the way it was today. Access wasn't the way it was today. Cost wasn't as low as it is today. You today have the very best scenario that you can possibly have. It is better today than it was when I started trading. It is better today than it was 5 years from now. It is better today than it was last year. It's better today than it was yesterday. Every day gets better in this business. Don't ever think that you're late to the game. You're not late to the game. All right? I believe that we have 24-hour access trading coming upon us. It's just going to keep getting better, where you no longer have to make a choice as to whether or not you work during the day or trade during the day. You'll have the ability to trade 24 hours in your lifetime. This is coming up now. This is in the works now, where every stock's going to be 24 hours a day, globally accessible throughout the world. And so trading itself is just going to keep getting better. The opportunities are going to keep proliferating. And I think the opportunities for pulling money out of the markets are going to proliferate as well. So don't ever think that you're too late to this. Anyway, guys, quite a surprise here, huh? All right, quite a surprise here. Love you guys. Where are you guys popping in from before I get started here? I want to talk to you about something specific here today. But where are you coming in from? I'm looking at your comments here. Where are you in from? I want to know what country, what city, what county, I don't know, what state, what region of the world are you piping in from? I'm just curious here. All right? Child of Light says, those eyes are of a man that survived the horrors of the market. I've gone through my ups and downs, guys. All right, for sure. 44 years and counting. All right, crazy, crazy. Not many of us left. Not many of us left. I see Norway's in the house, Georgia's in the house, Texas, Portugal, London, Colombia, India, Florida, Portugal, Nairobi, Kenya. Nice. Okay, I'm looking at you here, guys. Cuba, Maryland, USA, going by really fast. Jersey, Guadalajara. Ricardo is in Brazil. Romania. Wow, Medellin. All right, mi hogar. Chicago, Dallas. Where's that? Botswana. Nice. The Netherlands. Awesome, guys. International audience as always. All right. Drawing interest in people from all over the world. Guys, just if you haven't already, if you are taking advantage of anything that we do here, we put a lot of work into these things. Make sure you like the videos, you subscribe to the channel, you click the bell in the upper right-hand corner to turn all notifications on. Do that for us. It helps the algorithm. It helps me get this all-important message of trading markets for a living, if you can, to as many people as possible. And quite honestly, what I would like to do, not from an egotistical point of view, guys, I'm too old for that, but I would like to be able to get our channel up to 1 million subscribers, just so that I know that the work that we're doing is really making an impact to a lot more people. I think that there are far too many and far too much nonsense that's basically promoted when it comes connected to trading, especially today. And I think that a lot of you, I hope that a lot of you see that there's a level of authenticity here. It is not predicated on a lot of promotion. Yes, I do promote our programs because I truly believe that those programs sort of help individuals do this the right professional way. But aside from that, there's not a lot of pushing on you. We do a lot of work to make sure that every single day something of value is given to you, something that will keep you on the journey, progressing, making one additional step every single day toward that ultimate goal of becoming a professional trader, okay? All right, guys, so listen, what I wanted to talk to you today, all right, is about a question that my team has told me comes up incessantly, and it's regarding candlesticks. And what my team told me is that the most predominant question relating to the topic of candlestick charting is whether or not the traditional candlestick format is inferior to another type of candlestick, a more modern, a more recent formation or version of candlesticks, such as, I think it's the Heikin Ashi. And I think that's the number one question. Oliver, I see that you use traditional candlestick charting in all of your work, but what about Heikin Ashi candlestick sticks? And what about this version and that version, what have you? And I'll start off by saying this before we go to chart so that I can show you a difference here. The first thing I will tell you is that any form of charting is better, any form of candlestick charting is better than nothing. So I feel that the candlestick version of charting is far better by orders of magnitude than your regular bar charting. It requires more thinking and analysis. And so the candlestick drops the need for thinking and analyzing as much as the regular bar chart requires. So I like that. So any form of candlestick charting is better than bar charting. Any form of candlestick charting is better than line charting. All right? And so I wanted to get that out of the way. All right? Candlestick charting, in my opinion, is superior to all the other major forms of charting. Now we get into splitting the hairs. Is the traditional form of candlestick charting better or inferior to Heikin Ashi? Is the traditional form better or inferior to volume candlestick charting, and so forth and so on? All right? And that's what I want to talk to you about today. In particular, the difference between traditional candlestick charting and Heikin Ashi charting. They both have benefits, right? But I'm going to tell you why, I'm going to explain to you why I prefer the traditional form over the Heikin Ashi form. But I will also show you what's superior about the Heikin Ashi form of candlestick charting. So let's do this right now, if you'll allow me, okay? So what you are looking at right now is a 2-minute chart of strategy. It was formerly known as MicroStrategy, the Bitcoin treasury company run by Michael Saylor. All right, I'm a big fan. But every bar represents 2 minutes of trading. You have 2 main moving averages. If you followed my work for any particular time, you know that I do not look at a chart unless it involves or includes the 20-period moving average, that's the blue line, and the 200-period moving average, that's the red line. All right? Now, if I may, guys, let me do this. Let me try to keep myself present here while I'm with you here. Give me a second. I'm going to try to turn, if I can. Give me a second here. No. Oh, maybe I can do it. Why is that not on here? There we go. I want to see if I can get myself in that upper right-hand corner, just so that I stay with you, okay? All right. I think that'll work. You let me know if it's not working, okay? So anyway, so here we are. 2-minute chart, 20-period moving average blue line, simple. 200-period moving average red line, simple as well. Now, this you're looking, the candlestick format that you're looking at are the traditional regular candlestick, which involves all the data points of a period. So if we're talking about a 2-minute period, your 2-minute bar, all right, for instance, this 2-minute bar is going to show you the high of the bar, the low of the bar, the open of the bar, and the close of the bar. And if we take another example, I'll blow this up so you can see a little bit more detail. If we look at this 2-minute bar, the traditional candlestick is going to show the low of the bar, the high of the bar. It's going to show you where the bar opened and where the bar closed. Now, the close and the high on this bar happens to be the same. All right? But one more time, if we take, I want to take a bar that has all 4 data points very clear for you. We can go here. If we take this bar right here, you have the open of the bar, the close. How do we know which part of the box is the open and close? Well, if it's red, the open is the top of the box, and the bottom of the box is where it closed. If it's green, the open is the bottom of the box, and the top of the box is where the bar closed for that period. We're looking at a 2-minute period, right? We also have, in the traditional candlestick format, the showing of the low, that's going to be at the lower extreme of your bottoming tail or wick, and the high, which is going to be at the upper extreme of your tail or wick, okay? So in the traditional form, you have all 4 data points, okay? In the Heikin Ashi, if I were to show you this and flip this to the Heikin Ashi chart, you're going to see a more smoother version of the bars. Why is that? Because it doesn't give you all 4 data points per se. It averages those 4 data points into a general average. So it takes the highs and averages the highs. It takes the lows and averages the lows. It takes the opens and averages the opens. And it takes the closes over a certain period and averages the closes to give you a more smoother, cleaner look to the chart. Now, here's the important thing. That's the difference. You lose, guys, look, in the traditional form, you have all 4 data points every single bar. When you average those data points, you lose the specific detail, the precision. You lose precision every time you average. I want you to think about what a 200 period moving, what a 20 period moving average does. It averages all the individual bars over the past 20 bars. So you lose the detail of each bar in exchange for seeing a smoother representation of all of the individual bars. Now, that doesn't mean that it's worse than the other when you lose the detail. It just, you have to pick your poison. What are you after? Because there are benefits to smoothing the data out. But there are also benefits to seeing precisely where a specific point is. All right? So listen, when I need to know, I want my traders to know exactly to the penny where you hit this thing up. I need you to know. It can't be vague. It can't be, it's in the area. Oliver, I'm entering in the area around here. No, not around there. I need you to tell me to the penny where you're going to risk your capital or my capital. Not, oh, I'm going to risk your capital around this, in the vicinity of this price. No, there's no vicinity when it comes to you risking my money. I need you to tell me to the penny where my money is going into the market, where your money is going into the market. I want to know precision. I need the regular candlestick bar for my entries. I need the regular candlestick bar to know my precise stop out point to the penny. I don't want an average stop out price. I don't want a general area where I get out to protect my money. So when it comes to entries and exits, it is regular candlestick, hands down. I need that precision. I need that precise high of my entry bar, or I need the high price of the previous bar if I'm going to enter 1 penny above the previous bar. I need the precise low of this bar or this event if that is where my stop is to the penny. I don't want it vague. I don't want it average. I don't want it freaking smoothed out. All right? So when it comes to entries and exits, I need that precision that the classic candlestick chart gives me. Now I'm going to go to you, and I need to make sure before I move on that you understand this point, that you understand the difference. Let me know, yes or no. You understand the difference between what the Heikin Ashi does? It averages and smooths it out like a moving average, and the classical doesn't. It gives you the precision, price per price, bar per bar, period by period. There's no smoothing out of the data whatsoever. I need you to make sure that you understand me when I say, when it comes to entries and exits, there's nothing more superior than that level of precision. All right? Tell me you understand. Make sense? Make sense? I'm looking at your charts. Just want to see a few yeses. Make sure we're still on the same page. All right? Make sure everybody understands what I'm saying. Yes. Ricardo. Paxton says, yes, I understand. Black tie marketing. Yes. Understood. Rui. Excellent. Excellent. Very important to understand what is going on here. All right. Just want to make sure this is operating properly. It is. Okay, cool. All right, cool. Good. Now, let's go back here. Now, when I say that I need the precision when it comes to entries and exits, I want to give you an example of this precision. My traders playing MicroStrategy would see this bar in particular being what's considered to be a clearing elephant bar, not too far away from the 20-period moving average. So here's an elephant bar, that bar right there. Why would they consider it a clearing? Because this is the bar, there's a little one there, but we throw little ones into the big bar, okay? So what's really happening here is that you're getting a complete clear. This is the first bar that is really clear of prior price data. That's what makes it clearing. It's clearing price data. So if you look to the left of this bar, there is no conflict or colliding with former data. You have to go back a ways to see former data. There's no former data right next to it in the recent vicinity of this bar, making it a clearing elephant bar. Very powerful short signal on the downside. You can have clearing elephant bars to the upside as well. But this clearing elephant bar to the downside would suggest there's going to be follow through, especially since you have an overhead 200 above you that is bearing pressure on the stock downward. You also have an overhead 20-period moving average bearing pressure above you, and the space between the two is also like a concrete ceiling of resistance. You see that? So that block of concrete there, guys, above this clearing elephant bar that's dangling down there like that, means that an upward move, you don't have to worry about anything. That ceiling is going to keep that upward move intact. This should have follow through to the downside. Now, I'm going to show you where the precision comes in, okay? You see, in addition to whacking this bar, my traders would be taught to enter this bar. Come from way over here. Boom! Enter that bar before it closes. Enter your clearing elephant bars before they close. But also, they're taught that you must also enter on the first color change. Now, if you followed my work for any period of time, you understand this. You must additionally hit your play up on the next color change. So you enter the igniting event and you add on the first color change. Well, if we go back to the chart here, what's the first color change? It is right here. When you get green, is taken out, sorry about my puppies, excited here, taken out by red right there. So your next color change add is here on that follow through red point that breaks the low of green. I need the precision of the low of that green. Do you understand? I need to know when that green finishes, where's the low? And if a red bar breaks that low, 1 penny below that green bar is my next entry. So I enter 2 lots on this one, 1 lot on my add, and boom, I've got my 3-lot position. Or in some cases, my 4-lot position, 2 and 2. All right? So that's the kind of precision that I need that is offered by the classical candlestick, the classic candlestick variation. Now, if I change this to Heikin, Look at what happens to this point there. Watch this. Look at what happens to my color change opportunity. I'm going to go to Heikin Ashi. It disappears. Do you see that? Even it becomes a little harder to know where's my clearing elephant bar, but where's my color change? There's a hidden one here if you want to get very specific, but that's a little bit more advanced. My color change is not there. The next color change reality is way down here, so I missed this opportunity here that was there. I get a late color change all the way down here. You understand? And I get another late one down here. When in fact, if I went by classical standards, I would have made a lot more money. I would have made a lot more money doing this. Let me change it back. I'll show you. I would have entered this bar, boom. I would have entered that color change, boom. And where you see the next entry point, my entry point is here on classical, but my entry point on Heikin is here. Look at the difference. Look at the profit I gave up by entering that late. Instead of my second entry there, my second entry on Heikin is here. Now, so look, this, I want you to see the huge difference in price here. Let's call that 387 to 385. So that's like a 2-point difference. On 1,000 shares, I just gave up $2,000 in profits. And because it's 2 lots, that's 2,000 shares. All right? Some more light in here. That's 2,000 shares. I gave up $4,000 in profits just because I wanted my bars smoother. I want my bars smoother, Oliver. No, man. I need exact precision. I make more money when I have exact precision that way. All right? Tell me you understand this. I got to go back to seeing you. You got to let me know. A few of you let me know. Did you understand that example? Let me know. All right? I'm going to take a look at you. Look at your comments here. All right? Make sense? I'm looking at your comments here. Does that make sense? Ricardo says my dog is agreeing with me. Yes. Got it? Make sense? Let me know. Good. Rui says yes. Alade says yes. Makes perfect sense. Good. Now, last point I want to make for you. Let me explain to you when Heikin Ashi, or under what circumstances Heikin Ashi can shine over classic candlesticks. Like I told you, they all have their strengths. This is where it shines. Let's go to the charts again, okay? To the charts again. Second here. Now, anytime you are averaging something, it is always better during a trending market. When you average during a sideways market, you get killed. All right? Look at the average. Look at the averages. Look at your 20-period moving average and your 200-period moving average here when the market's sideways. It's kind of disrespecting the moving averages. The stock is acting like the moving averages are meaningless. I can spend time above you. I can spend time below you. I can sear through you anytime I want. That's what the stock is saying. You make no difference to me. I can sear through you anytime you want. Here I'm below. now I'm above. I'm above the 200, now I'm below the 200. I'm above the 200, now I'm below the 200. When they're flat and not trending, when they're trying to average a sideways movement, moving averages are horrible. But look at when they start to become obeyed, right? So for a period, your 20 starts to trend. And now it's obeyed a little bit more, you see? You see how the 20 is trending and now it's obeyed. So moving averages become, the 20 becomes more powerful in a trending state because it's an indicator that averages. Anything that averages becomes superior in a trending state. When it's not a trending state, it's horrible. So, likewise, Heikin Ashi candles are an averaging, it's an indicator that averages, which means that its superiority lies in a trending market. Now, I want you to look at how this is the classic trend to the downside. You see the noise there? So this is your whole movement to the downside in classical, all right? I want you to look at the jags, the jigs, the wigs, the zigzags, back and forth, boom, 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 boom. Now, if you don't know what you're doing, these can fake you out, cause you to panic out of your play when you're trying to maximize the whole movement down. Well, Heikin Ashi candles can help you when your stock is trending, smooth that out a little bit. So now you get a smoother, all right, it still couldn't smooth this out because that move up was too big, but you get a smoother move during the trending markets. Why? Because it's averaging out the noise. So if I were to say, use Heikin Ashi, and I'm not, but if I were to say it, if I were forced to make you use it, I would say only when your 20-period moving average is trending. Meaning, only when your 20-period moving average is doing this on a stock, and only when it's doing this on a stock. Oh, I did it the wrong way. Okay? So when your 20 is trending, Heikin Ashi candles can have some superiority in helping you hold on. But in truth, you don't really need it because that's the purpose of the 20-period moving average in the first place. I could hear the 20-period moving average saying, bro, what are you doing? I got you. I do that. I do the averaging for you. You don't need something else. Relax. I got you. You understand? So the 20-period moving average takes care of you. Let's go back to the classical. And if you're rocking with the 20 and taking profits away from the 20, entering at the 20, taking profits away from the 20, entering at the 20, all right? So you're taking profits away from the 20, entering on the color change or the event at or near the 20, entering away from the 20. You see? We exit away from the 20, enter near the 20. So the 20's got the average for us. We don't need the bars averaged themselves. We need a separate indicator outside of the bars that's giving us a smoother picture of the bars. So we have the precision in the bars, but the smooth out version of the bars in the moving average. So we have both, but they're separate. In With the Heikin's trying to give you the smooth aspect of it in the bars, so you lose the detail in the bars. But the details we need for entries, exits, and stops. So we lose that. So I say, whenever you want to know the answer of whether I believe something is superior over another, just look at what I use, because trust me, this is as certain as night follows day, people. Do you understand? This is as certain as night follows the day. If I find something that is superior to what I have, I'm going for it. If I'm not using it, it means that I haven't found it to be superior to what I have, to what I use. There is also this tendency on the part of a lot of traders, particularly the novice variety of traders, right? There's this tendency to want to tinker. How can I make it better? Maybe it's this form, maybe it's this indicator, maybe it's this platform, maybe it's this exchange, maybe it's this market, maybe it's this time frame. You know, maybe it's this indicator, maybe it's that indicator, that. They're always looking to try to make something better with little tweakings, when really the only way to make something better is to make you better. You see, the carpenter needs to be better, not the tools. If a guy is a terrible carpenter, you don't change his tools and say, well, you know, you're terrible because your tools are bad. No, you don't know carpentry. Get your carpentry skills up and watch that heightened skill flow through the same tools. It's not so much the tools that need to be changed or tweaked or improved upon. You need to be changed or tweaked or improved upon. The carpenter needs to get his carpentry skills up. The trader needs to get his trading skills up, to get his discipline up, to get his responsibility up, to eliminate that impulse to blame something else except yourself. All right? So try to resist this tweaking. Maybe it's another mentor. Maybe it's another platform. Maybe it's another course. Maybe it's you. Do you understand what I'm saying? Maybe it's not the difference between classical candlesticks and Heikin Ashi. Maybe your success is not that difference. Maybe instead of looking without, look within. How can you become better? How can you become more disciplined? How can you become more precise? How can you become more aware? How can you become better at spotting opportunities? How can you become more disciplined? How can you become more responsible? How can you become a better keeper of your own word? How can you finally do what you say you're going to do? Those are the big sweeping things that make the difference between whether you're good or bad. Not, I think I became a great trader because I switched from classical candlesticks to Heikin Ashi ones. Do you follow what I'm saying, guys? This is why I don't have 1 million followers here, because I speak like this. I get it now. I don't promote shit like this. Do you understand? That's why I don't have 1 million followers. I don't tell you that there's some secret, fast shortcut. Dude, you got to work your ass off. You got to put the study time in. You got to put the trading time in. And you got to point that very sharp flashlight of yours, which you are so willing to point at something else and someone else. And you got to turn that instrument onto yourself. That is what is going to make the biggest strides in your trading game. You. A successful trader can take a freaking telephone with a cord on it and outtrade you. A master trader could literally have to call his trades in like I used to have to do in the 1980s. Call it in. Wait for someone to pick up the call and then fumble around with the order and then place it. They will still outtrade you with your mouse clicks or your hotkeys to this very day. It is not as much the tool, not that they're not important, but I'm saying it is what flows through those tools that make the big sweeping changes. And what is that? You, the power or lack thereof of you goes through a candlestick, goes through a moving average, goes through a platform, goes through a tactic, a technique, a strategy, a method. You make the method. You make the strategy. Give the same strategy to a master trader and a non-master trader and watch the same strategy look very different, even though it's the same strategy. So it's not the strategy. It's the person flowing through the strategy. You have to work on you. That is what we help traders do. All right? All right, guys, you understand what I'm saying, though, right? And you understand why I don't have 1 million followers. Sorry. I'm never going to stop talking like that because I know what it takes. All right, guys. So just wanted to have a session. My staff said, Oliver, we're getting this all over the place. Can you please address it? So I'm addressing it here. So now what they're going to do, this will become a permanent electronic footprint. And anytime that question comes up, and you help me out too, anytime you hear that question raised, send them this link. All right? All right. E-Trader saying, Oliver, can you please explain why you dropped the 8MA? I did not drop the 8MA. I just don't have it permanently on my chart. I use it when it's to be used. But I don't really like my charts to be noisy. Some traders do okay with having 5 moving averages on their chart. I feel the best when it's clean. And I'm so experienced where I can tell you where the 8-period moving average is on a trending stock. I don't even really have to put it on. And you can do that too. I can teach you how to do that really simply. You just split the stock and the 10. You split the stock. If the stock is trending and you've got the 20-period moving average, the middle is the 10, and just a little bit more is the 8. Simple. You can find the general area of the 8. But when it's applicable, I will bring the 8-period moving average on the chart, and then I will remove it when it's not applicable, just because my personal preference is to keep the chart clean. All right? I just see the opportunities better that way. All right. Okay. Satish is saying how to be disciplined in trading. That's a $64,000 question. That's like saying, how to live life. But there is an answer. You first must have something to be disciplined about. Do you know how many people are sloshing around in the markets today and they don't have anything to be disciplined about? So not only are they not disciplined, they have nothing to be disciplined about. You understand? They don't have a method. They don't have a sound strategy. They're in chat rooms talking to bozos that are bigger than they are. They're surrounded by untalented traders. This is the worst thing you can possibly do, is surround yourself with people who don't know what they're doing. They're following news, which is the second worst thing you can do. If it were easy as good news I buy, bad news I sell, dude, we'd all be billionaires, right? It's not that easy. That's not the way it goes. So you need first a sound technique, a sound strategy, a sound method, detailed. Once you get that, you have to practice and work on being disciplined, implementing that strategy, that technique, that method. Most people never in their whole lives ever arrive at something sound to deploy every day of their lives, every trade of their lives. So you must start there. And once you know I have something sound. I have something that if I apply it will work over time. Then you can work on being disciplined to carry that out. But what use is discipline when you have nothing to apply it to? You see, people, and I'm going to leave you with this thought. There is this erroneous assumption that the markets have order, but the markets do not have order. This erroneous notion causes individuals to spend most of their trading lives searching for something that does not exist. They are going into the markets every day of their lives in search of a holy grail that is not in existence. They're looking for order. They're looking to try to figure something out in the markets. The market doesn't have order, people. Do you understand? You must bring order to it. The market is chaos theory in its purest form. All right? You must bring order to the market. The market doesn't have rules. You must bring rules. The market can't stop. You must bring the stop. The market doesn't know when to go, when to start. You bring the start. You bring the stop. You bring the rules. You bring the order. You bring the discipline. The market doesn't have discipline. The market will not cut your losses off. You have to cut your losses off. The market doesn't know where to take profits. You must have rules to take profits. You bring the things that are needed. But you have millions of people trying to find those things in the market. They don't exist. And this is what I dedicate my professional life to teaching you how to do this the right way. And you can't go by your brain, not if you haven't arrived yet. How is the unsuccessful trader in a position to decide what is right for himself and what is wrong? Think about that. They're losers. They lose on almost every trade, but yet they have the capacity to determine, I think this guy is better. I think this mentor is better than that mentor. This program is better than that program. Dude, you can't pick a winning trade, but you can pick a winning method, a winning technique, a winning mentor, a winning teacher, a winning program. How? How are you in the position? How is the problem? You are the problem. How is the problem in the position of being able to identify the solution for himself? It can't be done. That is why you can't rely on a cerebral process to choose your mentor, your trainer, your program, your whatever. You have to use your heart. Now, I know that the heart has been largely downplayed when it comes to reason and activities that require logic, but this is wrong. In the beginning, you only have your gut reaction. You only have your feeling about whether something is true, because there is something embedded in all of us that kind of can detect authenticity. We're born with it. It's inbred in our DNA. We can damage that sensitive nature, but for the most part, we have it. You understand? You ever walk down a dangerous street and for some reason you know that there's nothing specific that tells you to be careful. You just sense it. We have to be careful. There's something inside of you that knows, that can feel, that can sniff out authenticity. In the beginning, you have to rely on that, because if you rely on your brain, that's the same brain that's causing you to lose every single trade. Can't rely on that. And later, that brain becomes reconditioned by the proper training. A new consciousness emerges, a new way of seeing, a new way of being. But until you get that corrupted consciousness, that erroneous way of deciphering the truth in the markets, which is really a symbol of your ability to decipher the truth in life itself. Trading is a microcosmic version of life. So if you're doing it in the markets, you're doing it in your life. Until you correct that, you have to rely on that feeling that hopefully has not been damaged so much that you can't even feel, because then you're lost. All right, guys. All right. I miss these. I miss these, guys. Love you to death. I hope you enjoyed this session. I hope you took it to heart. I told you, every single time I grab a mic, made a promise I'd try to deliver something of value, something that I believe you can learn from and use, not just today, not just tomorrow, not just next week, but for the rest of your life. I think that what I shared here today can be used forever. All right? And if I failed, all right, I'll get better. I promise. All right, ciao for now, guys. Boom. Boom. Ciao. Love you guys.